disposal of non-current asset. Now, with this topic, there are certain things that I already expect you to know. The first thing that I expect you to know is you must know the theory of depreciation. You must already understand what is depreciation, what is provision for depreciation. You must already know all this, all this theory. The second thing that I will expect you to know is the calculation of depreciation. This is now using the three methods. The three methods that we are going to use is straight line, reducing, and book value. Book value and revaluation. I expect that you know how to calculate depreciation. The third thing that I expect you to already know in this video, because there's already the first video on YouTube. So in this video, I expect that you know how to work out the financial table. How to work out the financial table. Because the financial table is very important in your recording. And then I expect you to know the double entry. I expect you to know the double entry. Now, the double entry, I mean, for example, just need to give you an example. Like I said, I need to do it step by step. What I mean is, if you have an account here, and this account is depreciation. And inside here, you have an account provision for depreciation on vehicles. When I say I expect you to know double entry, automatically I expect you to know that if the depreciation account is debited, the contra entry that need to be recorded should be what? Who can tell me what the contra entry should be? What should be the contra entry here? Are we here? Someone? Can you hear me?
So we record depreciation in the provision for depreciation account on the credit side.
Yes. Provision for depreciation on vehicles. So when I say I expect you to know double entry at AS, if you find something like this, automatically you must already know that I am going to create an account that need to go to the credit side. And the account that is going to be created is what is written inside. We have provision for depreciation on vehicles. And since this information is on the debit side, this one will come to the credit side, and you are going to write the name of the other account, which is depreciation. This will really help. Make sure you understand this. That if you have a depreciation account, already in your head, you must know that the contra entry is depreciation, provision for depreciation, and I put depreciation on the credit side. So that's what I mean by you need to know your double entry. Now, the other thing that I expect you to know is, if I didn't now forget it. Is how to record the asset account. How to record the asset account. Recording the asset account. Now the asset account is also in the first video on YouTube. You just go and check. Make sure you know this because this topic, today's video is not going to concentrate on it. Now, when you find the depreciation question, what are the things that you need to look at? I always prefer to go through the guidelines. What are those key things that you need to look at? The first thing is your non-current assets. Should I say guidelines? Okay, the word shouldn't be guidelines, but maybe this one will help. Number one, you must find out your non-current assets. Now, these non-current assets I want you to find out how many are they, because you must not miss out any of them. If you can, you must number them. You number them as A, maybe you number them as asset B, you number them as asset C, just so that you can track their movements. If you cannot number them as asset A, B, C, you must categorize them with their amounts. Then you say it's the asset that was 90,000, it's the asset that was, let's say, 50,000, it's the asset that was 120,000. Make sure you categorize your assets because each asset is treated differently, even though once we calculate, we are going to put the amount together. Categorize them as either A, B, C, or you put the amounts. That is the first thing. I don't know how I will put it here. Then once you categorize them, the second thing is note. Let me just put balance brought down. Look out for balance brought down. I must say look out for balance brought down of the assets. Because sometimes we can start calculating and then we forget this balance brought down. So here I said you categorize them as A, B, C, and so on. Number three, what you must look out for, depreciation method. Is it straight line method, reducing balance method, or is it revaluation? Look out for a depreciation method. The next thing you must look out for the percentage. And this one I'm actually going to put it in red because it's very, very important. Or even in capital letters. Depreciation and how do you call it? The terms. Depreciation terms. Depreciation terms here now I'm referring to, is it month to month? But for AS, it's likely to be month to month. 80% of the time, it will always be month to month. Is it month to month? But sometimes they might say no depreciation in the year of disposal. Is it no depreciation in year of disposal? Look out for these things. Once you get them, then you are ready to go. Now let's go to our example. Okay, let's go to our example. The example is here. The first thing I said, we look out for the balances. Where are the balances? We have the balance here. We are going to call it A. Where is the other one? We bought a vehicle, this vehicle for 90,000. We are going to call it B. Another vehicle was purchased also. We are going to call it C. On the 30th of September 2024, the business sold a vehicle that was purchased on 1 March 2023. This vehicle that was purchased for 1 March 2023, it's vehicle B, so you are just going to put B. So you can see that you have 3 vehicles. Even though you have 4 or 5 amounts, you have 3 vehicles. That means when you are coming to calculate your depreciation, you must have the information for the first vehicle, you must have information for the second vehicle, and you must have information for the third vehicle. Every year, you must calculate depreciation. Every year, you must calculate depreciation. The only time you don't calculate depreciation for a specific vehicle is if we didn't buy it by then, or we already sold it, then we are not going to calculate. But when we get to the calculation, you will get what I'm trying to say. Now, what else are we supposed to look out for here? The method, the balance brought down, we already checked it. The next thing is the method. Let us look at what the method is saying, because the method is very important. Depreciation is charged at 20%. 20% per annum using reducing balance method. This one, I'll give it a different color. For each month of ownership, this statement here is the one that we call the depreciation terms. That means for every vehicle that is here, you make 90,000 times 20 divided by 100 times the month of ownership over 12. Now I'm just explaining in general, then we'll go to the calculations themselves. Perfect. Now we come to the guidelines. The guidelines for the asset account, we know when you have bought something, you put on the debit side, on the credit side. When you are selling, we already did this part. This is a financial table. I've taught you how to identify the financial table. This is the vehicle account. The asset account, I've also shown you that one. Now we come here. Calculation of depreciation. Now I said, one of the things that I expect you to already know is how to calculate depreciation. But the depreciation calculation goes a step further. In grade 11, you just need to know 90,000 times 20 over 100. You get the answer, that's it. But in AS, it's a little bit technical because you don't only calculate for one vehicle, you calculate for all the vehicles that you have in the business. And you must also check for how long have you been keeping them in the business. So we have a table here. There's someone that I saw having a very, very nice table. If you can use that table, it's also okay, but this is the one that I prefer. In the first one, you are going to list your assets. In the second one, you are going to list your basic calculation. You are going to list your basic calculation. In the third one, it's where you are going to list your month-to-month calculation. And the fourth one is now the final answer. Now, the moment you have a balance, maybe here I must put it as NB. I must put it as NB here. Do not forget to write the balance, because the balance is usually never in our buying and selling. in most cases, we forget them. Do not forget to write the balance. It should be the first thing that you must remember. Mr. Shilomboleni said, balances should be the first thing in my mind. So we go to year one. I already taught you how to get these accounts. Year one, we have this one that we bought in March. This is year one. We already know how to get this one. How we go to that March. The one that we bought in March is the one for 90,000. Now don't make a mistake and then you just come and write 90,000 here. If you write that 90,000 there, you will forget the balance. The first line should be reserved for the balance brought down, and the 90,000 must come in the next column. How much is our balance brought down? Our balance brought down is 70,000. Don't forget to put down the balance. Remember, if you have a question, you unmute and you ask. So we put here 70,000. Now, if you already know how to do your financial table, which is in video 1 on YouTube, you can see that in year 1, this is the only asset that we had. So that's why in our year 1 calculation here, year 1 calculation, we only have the 90,000 and the balance. That is the asset that was already in the business. The asset that was already there maybe 2 or 3 years before. What is the basic calculation? Basic calculation, we get it from the terms. What is our term saying? Our term is saying 20% reducing balance method. I said you must already know how to calculate reducing balance method. 70,000. I think I might have to reduce the font here. $70,000 minus provision for depreciation. That is how we calculate the reducing balance method. Cost price minus provision for depreciation. So what is the provision for depreciation for asset 1? Remember, every asset you do it on its own. So now we are only dealing with the one of the balance. This is the cost price, 70,000 minus 14,000. So we are going to write down 70,000 minus 14,000. You get the answer. I think most of you are doing mathematics. Yes.
56,000.
How much are we going to get? 6,000.
56,000. 56.
Okay, 56,000. Now there's no space for 56,000. I'm just going to multiply here. I'll just multiply here with 20 over 100. Now remember, I told you, don't put this whole thing on your calculator. Get this one first. Get this answer first, 56,000, before you multiply. Because if you try to multiply the whole thing on your calculator, the calculator is going to apply BODMAS, and it's first going to divide this. I just know it's going to be wrong. I don't know what the calculator is going to do, but I think it will apply BODMAS. Now, this is the basic calculation that we know from grade 11. Once you get the answer, the term says month to month. The terms on AS, it's month to month. So if you multiply here, how much are we going to get?
11,200.
11,200 is our answer. Now this 11,200, this balance brought down asset in the first year. Remember, balance brought down are the assets that you already had since the previous financial period. Was it in our business from the first month to the 12th month? Was it in our business for the whole year? Or did we buy it during the year, or did we sell it during the year? That is what this month to month is. is asking, did we have this asset for the whole year, for all 12 months?
Yes, sir.
Are we here at all? Let me see who are the learners that are here today. Because it seems like the learners that are normally active are not here today, or what's going on? Okay.
Yes, sir, it was.
We had it for 12 months because we did not buy it this year. We also did not sell it. So basically, you can do 12 divided by 12, but we know 12 divided by 12 is 1. So you don't even have to do 12 divided by 12. Because 12 divided by 12 just means this 11,200, the asset was with us for 12 months divided by 12 months. So if you know the asset was with you for the whole year, you don't have to do that 12 divided by 12. You just come and write here the final answer is 11,200. Now we have the 90,000. The 90,000 you start cost price minus provision. Now this asset was only bought this year, if you remember. It was only bought in year 1, in March even. So it does not have depreciation yet. So there's no provision for depreciation. Provision for depreciation is the previous depreciation for that asset. Depreciation for all the previous years. Now, since this is a new asset, it still did not yet lose value up to this point. So the provision for depreciation in this case is 0. So I'm going to write 0 here, but we don't necessarily have to write 0 because we know 90 minus 0 is still 90. Then we make multiplied by 20% over 100. How much are we going to get?
18,000, sir.
18,000. Now we go to our month-to-month calculation. Month to month, for how long did we have this business, this asset? If we go to our financial table, we bought it here. For how long did we have it in our business?
9 months.
3.
Okay, someone said 9 months, someone said 3 months. Which one must I choose? The person who said 9 and 3, who wants to justify? 3.
3 months.
Why do you say 3? Yes, why do you say 3? Since someone does not understand, we need to explain.
Sir,
Yes.
because it was bought in March and then the financial period ends in May. So from March to May, there are only 3 months. It's only 3 months.
Good. That's very good. The financial year ends in May and we bought it in March. That means it only stayed March, April, and May. It only stayed for 3 months. So this business, when it started this financial year in June, it only had the 70,000. It's only in March that they bought the second vehicle. Now, when we are going to depreciate it, we must only depreciate it for 3 months in the first year because that was the only time that it was generating benefits for us. So when we come to the month-to-month calculation, this is now where we are going to write 3 divided by 12. This is 3 months. I'll also just write here that it's 3 months divided by 12. How much are we going to get?
4,500, sir.
We are going to get 4,500. And these calculations, you must write them somewhere in your paper. Because sometimes, not always, sometimes if your final answer that you have in the T account is wrong, but we can see that all your calculations were correct. Sometimes you can be allocated a mark. Not always, but sometimes. Okay, we move. Year one is done. Now we might just find out how much is the total depreciation for year one.
$15,700.
50,700. So this is the total depreciation for year one. So I'm going to write here, year one depreciation. Now we are coming now to year two. Year two, I'm still going to start with what we call NB. I'm still going to write NB here. Those of you that were following, what does this NB mean to you?
It's the balance brought down.
You
Good.
shouldn't forget the balance breakdown.
Every year, the assets must be depreciated. You don't only depreciate the new ones that you buy. Every year, the assets are losing value. That means if you already had the balance, this asset that you bought for 70,000 long time ago, even this year, it's losing value. As long as you did not yet sell it, you must depreciate it. This asset that we bought last year, it's also losing value this year. So you must still calculate depreciation. This NB, it means the same things that you had before should be the first assets that you bring here. Before you even look at your transactions, those same assets that were there, you bring them down. The only time you don't bring it down, it's only if they say this one was sold maybe last year. Then it means it did not come to year two. So that's why here we started with the 70 and also the 90. Now we go to our information. Did we buy anything? Did we sell anything? We come to our year two, this financial year table. We already did it in video one. We bought something in December. We just need to find out how much did we buy in December. Another vehicle worth 120,000 was purchased on credit from Namibian Motors on 1 December, so it's 120. So the cost price that we have here is 120. So you can see all the information have been brought down. Now you are just going to calculate your depreciation again. Basic calculation of depreciation from grade 11. You say 70,000 minus depreciation for previous years. There was 14,000 before, and then there's also 11,200. Some people will make it 70,000 minus the total of these two. And the total of that two will be 14,000 plus 112. Some people will make it as 70,000 minus 25,200. It's also okay. Some people will make it as 70,000 minus this. I think you get 54, 56 minus 11,200. Whatever way that you do it. For me, I prefer to minus just depreciation one by one. It's the cost price minus depreciation for all the years. Which are all the years that we have? The one that we had before plus the one of last year, you must minus them. And then you are going to multiply. And like I told you, you don't multiply everything at once. You first do the calculation before you click multiply it. Basic calculation 20 over 100. How much do we get?
8,960.
8,960. Now, this column is for month-to-month calculation, was this business in our, was this asset in our business for the financial period? Yes, it was in our business for the whole year. So what we are supposed to have here is 12 over 12. But we don't have to make 12 over 12 because 12 divided by 12 is 1. So the same amount, we just bring it here. We come to calculate the depreciation for the 90,000. Remember, every asset need to be depreciated every year separately on its own. You start with 90,000 minus depreciation for the previous year is only 4,500. And then it's multiplied. The basic calculation, 20 over 100. Like I said, you must already know that basic calculation. How much are we going to get here?
90 minus
89.
85 500. 85 500.
No, sir.
Yes. Yeah.
And then you might
Say it's 17,100.
all together more.
17,500.
Okay, all together it's that.
So 100.
100.
sir.
100.
17,100.
Is the final answer. Is it 70 or 17,100?
100.
Yes.
Good.
Yes,
Now
sir,
you
not
come to your
500.
financial table. You check here. In year 2, we did not have anything sold. So this vehicle was in the business for the full year. Because it was in the business for the full year, it's 12 over 12. Then you just bring down the amount here, 17,100. We have a new one that we bought, 120,000. Now I'll be a little bit fast because now we get it minus 0 multiplied by 20 over 100. How much do we get here?
24,000, sir.
24,000.
24,000. Now, this
Yes,
one
sir.
was not in the business for the full year. This is now where you will come and say month-to-month calculation. Because it was not in the business for the full year, we check this financial table. Never forget to do it in the exam. It will take you even 5 minutes or even, but it's very important if you want full marks. For how long was this business in our, was this asset in our business?
6 months.
Perfect. Now you come and then you write 6 over 12. We get, I think it's 12,000.
12,000.
12,000, sir.
12,000.
Now this is the depreciation for the first asset, depreciation for the second asset, depreciation for the third asset. But the depreciation that you are going to record should be the total for year 2. All the assets, if you have 20 assets, you calculate each asset on its own and you add it together. So the year 2 depreciation is therefore
38,060.
38,060. Now this is the second year. Now we move to the third year. The third year again, I'm going to start with this. I'm going to put NB here. Now when you see this NB that I write down, what do I mean here when you are starting year 3?
The balance brought
What
down.
do I
The
mean by that here?
balances. We
Balance
don't
brought down, the
mustn't calculate.
balances. Good. Now in this case, it's not only the balance brought down, but everything that was in year 2, we have seen from the financial table that it was not sold. So everything needs to come to year 3. everything needs to come here. That is what that NB means. Meaning, because we did not yet sell the 70,000, we must calculate it again. We did not yet sell the 90,000, we must calculate it. We did not yet sell the 120,000. Now, if you look at this information, we sold one of the assets in September, but at the beginning of the year, we did not yet sell it. We still had it. We still had it here in July, in August, and in September. You must still calculate depreciation for this part. You should still calculate depreciation for those 4 months. So that's why when you check here, I brought down all the things that we had in year 2. They must all come down, and we must calculate depreciation for them one at a time. You calculate depreciation one at a time. Okay, we start with the first one. We follow the same drill, 70,000. Now here, I'm just going to add up all the depreciation together, otherwise it will be 14. But what we must know is you are taking 70,000 minus this, minus this, minus this. 70,000 minus all the depreciations. This was the depreciation that we had when we started our calculation. This was the depreciation of year 1. This was the depreciation of year 2. All of them, we take them out from 70,000. Now, just give me the final answer here so that I don't have to list all of them down. Maybe I should do this. How much do we get? Are we all here?
34,160.
34,160. Once you make cost price minus provision, you multiply with 20 over 100. How much do we get here?
7,168.
7,168.
7,168. Now, according to our information, did we sell this vehicle during the year? That one for 70,000. Maybe I must take you back here. Did we sell it, this one for vehicle A? Did we sell vehicle A?
No, sir.
No, you sold vehicle B.
Okay. So since we did not sell vehicle A, I don't know if I was saying C. Since we did not sell vehicle A, it means this vehicle was in for the full year, which is 12 over 12. But we don't make 12 over 12 because we know it's the same amount. You just bring it as 17168. Now, vehicle B, we do the same calculation. 90,000 minus depreciation for the previous years. Which one is the depreciation for the previous years? I'm going to use a different color here. In the first year, the depreciation was 4,500 for that one. In the second year, depreciation was 17,000. So depreciation for all the years, we add all those two amounts together, and then we get how much?
21,600.
21,600. You do the basic calculations. Multiplied by 20 over 100. How much do we get?
13,680. 680.
13,680. Now, since we sold vehicle B, it means it was not in our business for the full year in year 3. Since it was not in the business for the full year, we must find out for how long was it in our business. It was in our business for June, July, August, and September. That means we must only depreciate it for only those 4 months. So that's now the only time that you are going to make 4 divided by 12. That means you only make the month-to-month calculation when you buy something in the middle of the year or when you sell something in the middle of the year. So in this case, how much are we going to get?
4,560.
4,560. Last asset, the cost price minus $12,000 minus I'm waiting.
Just 12,000, sir. 12,000. For the final answer, sir.
120,000. Okay. Then we multiply here
Minus 12.
with 20 over 100. How much do we get here?
21,600.
21,600. Was it in our business for the whole year or did we sell it during the year?
No, it was in the business for the whole year.
So you don't have to make 12 over 12. So you just come and make 21,600. Now, how much is the total here? Which we are going to call year 3 depreciation.
33,000.
It's going to be 33,000.
328.
328.
320. Yes, sir.
All right. Now, this is how we do the calculations. If you can understand those calculations, then the T accounts are easy to get because T accounts is just the same as doing it in grade 11. But the T accounts, we are going to go faster. So now when you are going to do T accounts, every year must be recorded separately. That means you must first record this one, the 15,000 depreciation for year 1. Maybe I must do this. You must first record depreciation for year 1. Then you go to depreciation for year 2, then depreciation for year 3. Let's quickly record depreciation for year 1. Depreciation, we know that it's an asset. I don't have to go through these basic guidelines. They are also in your notes that I already gave you. Depreciation for year 1, if I remember correctly, I think it's 15,700, but I'll just verify quickly. 15,007. The details that we put here is provision for depreciation on vehicles. Because depreciation is an expense. And expenses are recorded on the debit side. Depreciation for year 1 for all your assets is 15,700. And the date, where are you going to get your date? You come to your financial table and check year 1 is here. What is the final date that we have? The final date that we have is 2023,
31st of May.
May 31st. That's the one that you are going to write. So you come here, then you write 2023, May 31st. What are you going to do? Completing double entry, which I already told you at the beginning of the video. You go to the depreciation account, but the depreciation account, something I should have mentioned, had a balance. When was this balance? It was 2022, June the 1st. It had a balance. Balance brought down of 14,000. If you don't know where to get where I got it, just unmute and ask. So here I'm also going to put here that NB and I'm going to make an arrow that don't forget the balance. You can easily forget the balance. Okay, from there, we just now come and complete our double entry by writing here, the information is coming from a depreciation account. Our amount is 15,700. Now, this is also important. The balance is important. What I'm going to write here is also important. The date, don't leave it at June 2022, June the 1st. If you leave it there, even if you have put in a lot of effort in calculating this, it's wrong. Your double entry here, your date was 2023. You make sure you also bring the same information here. 2023, May 31st. Now that account is done. What are you going to do now? You are just going to close it off. This one is an expense. Where do we close off expenses again?
To the income statement.
Close off expenses to the income statement. The closing off is from grade 8. I don't even need to explain here. I'll just put the amount. Which date are we going to close off that I need to put here?
First of all, wait.
Is it the first? When do we close off our accounts in the business?
No, it's the last day of the month.
The financial
Last
period.
day of the month.
At the end of the financial period.
At the end of the financial period. Year 1 is done here. Now you come to year 2. No, before we go to year 2, we close off this one. Provision for depreciation is a negative asset. We close it off on the small side. Obviously, this is the small side. We need the total here. This one I don't have to explain. We already know. I think it's 29,700. How to put the totals here. Here it's also going to be 29,700. But here I need to ask you, what detail must I put there?
Balance carried down.
Balance carried down because this account is an asset, a negative asset. And all assets, we close them off with balance carried down. And closing it off with balance carried down means it's going to the balance sheet. So then here we are going to have, we said already a few minutes ago, we close off on the last day, then the account is closed off. The first year depreciation has been recorded. Now in the exam, when you close off, I mean, when you record this account, you are going to get this answer correct. You are going to get that one correct. This one is not marked because we want you to bring it down. If you don't bring it down, then you lose a mark. So when do we bring it down? From the 2023 May 31st. The following day is still 2023, but it's no more May, it's now June the 1st. Balance brought down. Which amount must I put here?
29,700.
29,700.
29,700. Now, we have to round up now. Year 2, that's the amount. Now, someone tell me what must I do? Because now I've gone through the guidelines for you. Someone tell me now, what should I do? Can someone tell us what we should do?
So you have to record the 38,060 in the depreciation account.
We take this amount, the total depreciation for this year, we take it to the depreciation account, and you said we must record it here, 38,080. What should we put the details?
Provision for depreciation.
Depreciation on vehicles.
On vehicle.
Provision for depreciation on vehicles. What should I do next? Because I already gone through the guidelines for you. Now we must just complete it. What should I do
You
next?
close off the depreciation account.
Okay.
So
I'll
the
just close.
date,
Yes.
Or
Now
the
should I
date,
close
yeah.
off or should I put the date?
The date,
The date. Which date must I put there?
2024 May the 31st.
2024 May 31st. Now with the dates, they must, whatever you have on top must just come down. The only change is 2023, 2024. Here you are going to have 2025. Okay. What should I do next?
You
we
close it
close
off.
it off to the income statement.
Okay, so I'm going to write here income statement. I'm just waiting because now we are completing it. I've already gone through all the guidelines.
So the date.
The date,
Thirty-first of May 2024.
2024, May 31st. Please let's move fast.
Then
And the amount is 38,080.
80. What should I do? Next.
You write your
balance.
totals.
Okay, totals.
Isikira ay mga di mana eh.
Okay, next.
You record in the provision for depreciation on vehicles account.
We come to the provision for depreciation. Now I'm just going to wait up on you until we finish because I've already given you all the guidelines. What must I write next?
You
You
write
write the
depreciation.
date.
Depreciation.
We write the date. What date must I put here?
2024 May the 31st.
Details.
Depreciation.
Depreciation.
The amount.
38,060.
Okay, what do I
80.
do next?
You write in your total.
I write in my total. Then it's also my other total here. Okay.
No, it's not.
And
Oh,
then
it's
you
not
have to write
38.
the balance carried down
Okay.
on the debit side.
Looks like the total is not 38. How much is the total?
It's 67,780.
Okay, 67,780. Let's move. Otherwise, the video is going to be too long. What do I do next?
You have
You
to
can
write your
balance carried down.
on the other side.
Okay. So I must just write here balance carried down. And then
The amount of 67,780.
okay, so I write here 67,780.
And then your date, which is the 24th of May, 31st. 2024.
May 31st. Okay, what do I do next?
It's brought down.
Balance
Okay,
brought down.
whatever was carried down need to become brought down. Okay, so I must write here balance brought down.
Yeah.
And then
The date.
the date,
June.
The 2024 May.
June.
June the 1st
June the 1st,
of June.
amount
67,780.
780.
780. Now what do I do next?
We go to the depreciation account again.
We come to the depreciation account. Or you mean we come to the calculations? Okay, what do I do?
You take the
We record the
33,000.
33,200 and
We take this amount. Where do we go and record it?
In depreciation.
In depreciation, 33,328. Let's move fast.
In the details column, you write the provision for depreciation on vehicles.
Provision for depreciation. In the next 10 minutes, we should be done so that the video is only an hour long at least.
And then the date is 2025, the 31st of May.
2025, May 1st. And then
Then we transfer it to the income statement.
we transfer this information to the income statement. Let's move.
The amount is
So
And then we write the
33,328.
3328 and the date
2025 May
2025.
31st.
okay, let's move.
And then you write
And
in your
then we write down
totals
our totals.
of 33,328.
Okay, what do we do next?
We go to the depreciation account.
Provision for depreciation.
Provision for depreciation.
All right.
Then we write the 2025 31st of May.
2025 May 31st. All right.
Depreciation of
Depreciation.
33,328. Depreciation of
33,328.
Okay. Now
Then we
from
write down
there
our
you have done.
totals.
Okay, we can write in our total, which is
101,108.
Which will be the same total here. Thank you so much up to there. Now, the last part that I need to explain is when you sell a vehicle, the depreciation for that vehicle need to go out. Now, remember, every time when you sell a vehicle, it increases on the credit side. That means every time when you have a depreciation in the business, we kept on recording the information on the debit side. This was the previous one. Then we depreciated the first year, we recorded on the debit side. We depreciated the second year, we recorded on the credit side. Every time when we depreciate, we record it on the credit side. But if you sell one of the assets, the depreciation need to leave that account. It's like a child that was at your school. When that child is going to another school, all the bags, all the books, everything of that child need to be taken out also. So it needs to be taken out on the credit side. So every time when there's something that is sold, which is an asset, we call it vehicle disposal. If it was an equipment, you write equipment disposal. Don't just write disposal. If you write only disposal, it will be marked wrong, even if the amount is correct. So it's vehicles disposal. Now, when did we sell? This one I'm also going to put an NB because learners lose a lot of marks here. Put here NB, and then I'm going to highlight it. And then I'll say, you must put the date when it was sold. If I can remember, or if we can go to the exercise. On 30 September 2024, the business sold the vehicle that was purchased on the 1st. So we sold it on the 30th of September. So you come here and then you write the date when it was sold. So it's 2024 September 30th, vehicle disposal. Now this amount that we are going to put here is also very crucial. Very, very, very crucial. What are we coming to put here? What we are coming to put here is you take that depreciation, the depreciation that is for 90,000. I think it was the one for 90,000. And we find out when was the depreciation for the first year? It was 4,500. How much was the depreciation for the second year? It was 17,100. How much was the depreciation for the third year? It was 4,560. You add together all those three depreciation, because remember, when an asset is sold, every depreciation for that specific asset must be deducted. Like a child is going to another school, all the bags, all the shoes, or everything for that child must also be taken out. So the asset that was sold, the first year it had a depreciation of 4,500, it must be taken out. Second year, 17,000 must also be taken out. Third year, it was 4,460, it must also be taken out. So here, you don't have to write it in the exam, but for now I have to indicate it to you. You are going to take out 4,500 plus, I'm not remembering these figures, 17,100 and 5,460. 17,100 plus 5,460. Then how much is our total that need to be taken out?
26,160.
26,160. This is the depreciation for that asset. That means after you do that you are going to be left with a balance carry down, but this balance carry down is only for the assets that are still in the business. Balance carry down, which is going to be on the last day, 2025, May 31st. And how much is our balance carry down in this case going to be?
74,948.
948. Remember, you won't be marked if you only end there. You have to bring down this balance to the next one, to the next year. We already know how to bring it down, so we are not going to waste any time. We are done because the only account that is left is a disposal account, vehicle disposal, which I am 100% sure that you'll be able to do. Because you just put the asset cost price here, you put the provision for depreciation on vehicle, that 26,000 that we just calculated, and then you also put either cash if it was sold for cash, or bank if it was sold for bank, or debtor's name, not debtor, we call it trade receivable name if it was sold on credit. So these are the only number 1, number 2, and number 3 things that you record there. And these things are all given because the cost price is 90,000. This one is 26,000 something. It was sold for, the amount is also given there. So this one, unless if you have a question, I don't think we must even waste time on this one. Thank you so much for participating. I needed to record it because